Hey guys, my name is Ken. In this video, we're gonna review how to invest as a teenager. I would have loved to watch such video when I was under 18, but back then there were only cats on YouTube. To help you get started, I'm gonna give you a handy guide to the world of investing. With these instruments and strategies, you'll be positioned for long-term success and will be much financially educated than your friends who doesn't know anything about investing. So I have a deal for you. I'm gonna tell you about investing. You gotta smash the like button and make your first investments right now by investing in subscription to the channel. You may also want to check out other videos on the channel. This will help the channel a lot. So here are your steps to invest as a teenager. Number one is you should gain stock knowledge. This is the first step for teen investors and beginning investors, is to learn the basics of stock investing. Without an understanding of investing fundamentals, you run the risk of quickly losing whatever little money you cobble together to start building your nest egg. One quick way to get knowledge about the stock market is to sign up for some online courses or watch my other videos, which are all beginner friendly. So use every opportunity to gain stock knowledge. Number two is to identify your interest. You may want to get started choosing stocks based on your own interest. By looking for stocks in which you have an interest, you're likely to be more engaged in trying to understand how the stock market works. Here are some hints about what to consider when choosing stocks as a beginner investor. It could be your hobbies or businesses in which your relatives work or you work, companies that produce some of the items your friends and classmates like. It could also be companies discussed in business publications like the Wall Street Journal or other some magazines or other news websites, companies headquartered in your state. You could also pay attention to big companies included in an index such as the Dow Jones and S&P 500 or Nasdaq 100. And then you gotta understand what companies do. As a starting point, you should get a copy of the annual report of the company in which you may want to invest. An annual report is a document used by most public companies to disclose corporate information to their stockholders every year. It is usually a state of the company report, including an opening letter from the chief executive officer, financial data, results of operations, market segment information, new product plans, subsidiary activities, and research and development activities on future programs. Sometimes companies may use something called a 10K as a substitute for the annual report. The 10K is a filing required by the US Securities and Exchange Commission of all public companies. It contains much of the same information that companies put into their annual reports. To find these reports, just go to Investor Relations section on company's website. Once you've done that, then on fourth step, you gotta access the financial data. At some point, you'll want to get more detailed information about a company's financial performance, such as how much money it makes compared to similar companies in the same industry. There are actually many different types of performance measures, but you don't have to calculate them on your own. Many financial websites will provide the information you need, such as the return on equity, earnings per share, price to earnings ratio, and etc. These are all important indicators for how companies are doing. I would recommend the following websites that are mostly used to get this data for any company we want to research. They are Yahoo Finance, MarketWatch, and Morningstar. Once you have some information about stock market, you gotta experiment with virtual portfolio or dummy portfolio. Setting up a virtual trading portfolio is one way teen investors can overcome the fear of taking the first step in investing. There are a few sites that allow you to set up stock market games in which you can compete with your friends to see who has the highest profile in hypothetical portfolio you create with fake dollars. The sites tally up the daily portfolio values and rank them by username. Some of the virtual trading portfolio portals are as follows: MarketWatch Virtual Stock Exchange, Wall Street Survivor, How the Market Works, or you could also check TD Bank's Virtual Stock Market. After you played around with virtual portfolio, you gotta choose the right online broker. Minors aren't allowed to own stocks, mutual funds, and other financial assets outright. In some states, minors are defined as people younger than 18 years old, and in others, they are defined as people younger than 21. If you are a minor, you can make investments only under the supervision of your parent through a custodial account. One of your parents will have to sign you up for a custodial account offered by an online broker. You would own the assets in the custodial accounts, but your parent would control the investments in it, hopefully with your help, until you are no longer a minor. Important considerations to choosing an online trading account include: you gotta look for no stock trading fees. You should find online brokers that charge $0 to buy and sell stocks. This saves a lot actually. Second thing you want to look for is low balance stock trading accounts. Make sure the online broker doesn't require you to maintain a sizable minimum balance in a trading account. There are many actually that offer $0 minimum balance. Another thing to look for: brokers that allow for fractional shares. If you want to invest as little as $1 in reputable companies with high stock prices, you can only do so if the online broker allows you to buy fractions of a share stock. If they don't, you'll have to buy the whole share. Here are some brokers you may want to investigate. I'm not sure if they allow custodial accounts, but pretty sure that most of them do. An important thing, avoid scams. If someone promises you a profit that is much higher than you can get by investing in the stock market each year, you should run unless you really know what you're doing or you don't mind losing your money quickly. One adage that you should adhere to is this: high profit in any investment usually involves much higher risk. For example, over the long run, the stock market will generally only yield you about 7 to 9% interest rate over the long haul, depending on what period you are measuring. On the other hand, yes, the return on the stock market can be extremely high, but if you invest in an index fund that tracks an index like the Dow Jones or S&P 500, for example, the return on a fund that invested in an S&P 500 index fund in 2020 probably yielded about 16.3% profit. But in 2008, the return of the same type of fund was probably around negative 38.5%. So no one can promise you a steady return each and every year if they invest your money in the stock market. So anyone who tells you that they would like your money and that they will consistently get you a profit of say 12% each and every year by investing in stocks or in any other asset for that matter, on your behalf is not being truthful about the risk they are taking with your money. I've really seen investment offers that promise to pay sky-high interest rates for what are at best extremely risky propositions and at worst pure frauds. So I hope I was useful for you guys. Let me know in the comments if the video was useful for you or you have any questions regarding investments. I read all the comments and reply them. Here are more other videos about personal finance and investments. Make sure to smash the like button and invest in subscription to the channel. See you in the next video.